Moving on to accounts payable. Now we are at existence for our physical, not physical, right? But it's, I like to say the word physical for assets and liabilities, more so these actual balances at any point in time. How do we verify the existence of accounts payable? Well, we can confirm with vendors, so send out confirmations, and also examining support documents such as invoices and purchase orders. I'd say this is going to be much more what you're going to lean with. I know I keep kind of shutting down the confirmations for accounts payable, but this is going to be much more what we're going to look at. Completeness. Let's talk about completeness for accounts payable. Obviously, you can see we've got a little bit more here. And what are we going to do to verify the completeness of accounts payable? Well, we can examine vendor invoices for amounts not reported as purchases, as accounts payable would be understated for amounts of purchases that were not reported. We're going to look through those invoices, make sure they were actually accounted for. As we say over and over, yes, we're worried about the understatement of expenses, but also the overstatement. We're worried about both portions. We can also verify that all merchandise received is recorded through selecting receiving reports and determining whether the related payable was recorded, looking through those pieces of documentation, making sure that everything is properly accounted for. And lastly, here, searching for unrecorded liabilities. This is a big one, a big kicker here. We can examine receiving reports for items received before the year end but not recorded, kind of dealing with, kind of getting into cutoff there, but more so completeness when it comes to AP. You can also review purchase contracts and other legal documents, which could detect an obligation to make a certain purchase, payout in a lawsuit, etc. This ties into kind of contingencies and commitments, right? That is a similar sort of concept. And lastly, here, vouching a sample of cash disbursements recorded just after year end to receiving reports and vendor invoices. Now, the cash disbursements the auditor would be looking for are those to pay down a liability. If you're looking for these, random cash disbursements at the end of the year, well, think, why were those cash disbursements made? Why did you spend money at the end of the year? A lot of times that could be because they're trying to pay down a liability that was not accounted for properly, that was not recorded on the financial statements, something maybe management, if they're a little sketchy, might try to do. Now, when auditing AP, an auditor's procedures would focus the most on completeness, as an auditor is more concerned about the understatement of liabilities, which in tune would want us to make sure that we have a complete set of liabilities presented on the financial statements. If liabilities are not complete, they are understated. This is in contrast to an auditor's inherent concern about the overstatement of assets and revenues. Our inherent concern is overstating assets and revenues, whereas understating liabilities and expenses is our concern. You're doing great. Just remember that by powering through, coming through these lectures, you're doing better than most. You're sticking with this exam. We're going to knock it out together. We are going to see success. Keep studying strong. Take a break if you need to. We're going through, and now we're moving on to occurrence for accounts payable. Now, an auditor would verify the occurrence of accounts payable. First, we would conduct an out of period search. Now, what is that? This consists of comparing cash payments occurring after the balance sheet date with accounts payable balance to determine that disbursements that pertain to the prior year's activity have been properly accrued. So essentially just looking kind of like a cutoff situation there, comparing those cash payments after the balance sheet date to make sure that those were not trying to pay down liabilities that pertain to the prior year. We can also review the aged accounts payable list and confirm that the accounts are current, similar to the aged receivable balance. We can also test the accuracy of the coding of accounts payable transactions, make sure those are properly coded in the GL. We can analyze the nature and timing of payments to ensure that expenses were recorded in the year in which they were incurred. And lastly, we can confirm that any open accounts payable balances are valid. Let's talk about valuation, allocation, and accuracy. Moving on here, the valuation assertion relates to the dollar amount, right, assigned to an asset, liability, or equity account. Reiterating here, also as we go through these slides, I would definitely just make sure that you remind yourself what these are. Like I said, memorize them. An auditor would test this by what would they do? They would foot the accounts payable listing and agree it to the general ledger. And if you're not sure what footing means, well, footing is a term used to refer to the process of adding up the numerical values in a column to check that the total is correct. This process is typically used to verify that a company's financial records are accurate and complete. This is a very common audit term, so if you've audited before, you definitely know this term, and if you haven't, now is your time to learn it. Lastly, here we can review the results of accounts payable confirmations to look for that accurate balance, making sure it's properly presented in dollar amount and there's no errors. Let's talk about rights and obligations. Really, here is going to make sure that we properly present all obligations. Obligations means that all liabilities owed by the entity are properly accounted for and that any potential liabilities are identified and accounted for. What are we going to do here? We're going to review voucher packages for purchase orders, receiving reports, and vendor invoices. Talking about the presentation and classification for AP, we are going to test that by what are we going to do? We're going to review the status, the payable shortly after the balance sheet date to determine that it's properly classified as either current or non-current, similar to receivables, right? We want to make sure that we have our assets and liabilities as either current or non-current. Pretty important there. We can review documentation to determine that the accounts payable is properly supported. We can investigate any significant fluctuations in accounts payable from one period to the next, little analytical procedures there. And lastly, examining the terms of payment for accounts payable, examining contracts, making sure, basically all of these are going to assist in you trying to determine if it's current or non-current. Now, what are the departments involved in the expenditure cycle? We're going to see a few of those, similar to what we saw for AR and revenue cycle. We've got authorization, record keeping, and review. We've also got, sorry, I tricked myself up there. Authorization, record keeping, and custody. We've also got some review and support departments within the cycle. First off, we've got the purchasing department, which is responsible for buying goods and services from vendors. This is the department that issues purchase orders. Then we've got the accounts payable department, which is involved with record keeping, similar to the accounts receivable. They are responsible for maintaining records of all accounts payable transactions and ensuring that payments are made in a timely manner. They file invoices and supporting documentations after the payment is made. Then we have our accounting department, which is essentially record keeping right there. They're responsible for recording and reporting all financial transactions related to the expenditure cycle. Next, we have our budgeting department, which is authorization related. They're responsible for allocating funds to departments and tracking spending. Next up, for our internal audit department, they're kind of involved with review. Internal audit could really kind of be for any cycle at all. They're responsible for periodically reviewing the expenditure cycle to ensure that compliance with internal controls and segregation of duties, and to detect fraud and error. Next, we have our treasury department, which is involved with custody. They're responsible for managing the company's cash and investments, similar to the revenue cycle. Next up, information technology. Their support really had anything to do with IT related to the expenditure cycle. And risk management. These individuals are going to be responsible for assessing and mitigating any risks associated with the expenditure cycle. Very good there.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.